Last week, Nvidia's stock took a hit, dropping 8.5% in just 4 days. The markets were closed Friday for Good Friday, so it was a short week. By week's end, Nvidia's shares were at $101.49. In comparison, the S&P 500 fell 1.5% and the NASDAQ dropped 2.6%. Even AMD, Nvidia's rival, saw a 6.3% decline. Two major events influenced Nvidia's stock this week. Let's dive into what happened. Before we begin, this video is not an investment advice and must do your own diligence. However, with my experience investing for years, the content from this video has a solid research foundation. Check our Patreon on the description below for an inside members-only access on what are the best buys now. We will also update you on what to sell for gains or to avoid losses. Subscribe to our channel so you will never miss out. Nvidia shares jumped 1.3% on Tuesday, while the S&P 500 dipped slightly by 0.2%. The boost came after Nvidia's big announcement. They're building AI supercomputers in the US. Production's already started in Arizona with TSMC. Plus, new plants are coming to Texas with Foxconn and Wistron. Nvidia's aiming for $500 billion in AI infrastructure. This could be a game changer for US tech. Nvidia shares took a hit, dropping 6.9% on Wednesday. The company revealed a potential $5.5 billion charge in Q1 results. This stems from U.S. restrictions on exporting H20 chips to China. Nvidia can't fulfill orders from Chinese companies for these chips. They also have unsellable H20 chips in stock or only at discounts. Demand is low outside restricted regions. U.S. prefers advanced chips. The stock continued to fall Thursday as investors reacted. The U.S. government has expanded its export restrictions again, marking the second major update since August 2022. These controls target chips for AI workloads in data centers. The October update hit Nvidia hard, affecting its data center sales. Nvidia's H20 chip was a workaround for China, but now needs a license. On April 9th, the U.S. flagged the H20 for potential supercomputer use. By April 14th, the license requirement became indefinite. In practice, this acts as a ban, with no licenses granted yet. The key question for investors is how much the new export controls will affect Nvidia's financial results. Nvidia's first quarter of fiscal year 2026 ends on April 27, 2025. The company has already announced its earnings release date, which is after the market closes on Wednesday, May 28th. For fiscal Q1, Nvidia had guided for revenue of $43 billion, translating to 65% year-over-year growth. $5.5 billion in H20-related charges amounts to 12.8% of the company's forecasted revenue. Nvidia just about always beats its guidance, so it's probably safe to assume it will generate revenue of $43.5 billion to $44.5 billion before accounting for the charges. Assuming Nvidia would have taken in revenue of $44 billion, excluding the charges, its revenue would be about $38.5 billion with the charges included. How does $38.5 billion in revenue stack up to the results for the prior quarter and the year-ago quarter? Last quarter, Q4 of fiscal 2025, Nvidia's revenue was $39.33 billion. It seems likely that Nvidia's fiscal Q1 revenue will probably be slightly lower than last quarter's, with the best-case scenario being revenue comparable to that of last quarter. In the year-ago period, Q1 of fiscal 2025, Nvidia's revenue was $26.04 billion. If we assume the company's fiscal Q1 2026 revenue will be roughly $38.5 billion, year-over-year growth will be about 48%. While that's quite a bit lower than 65% plus, it would still be darn good annual growth. The $5.5 billion in charges will also hurt Nvidia's net income or earnings. This effect is not quantifiable because the company doesn't break out any form of profit by its target market platforms. We know from prior management comments that the data center platform's profitability is greater than the company's overall profitability. It's probably safe to assume that the hit to the company's net income will be greater than the roughly 12% to 13% reduction in revenue. Let's be clear. The H20 chip restrictions are expected to have a major impact on Nvidia's financial results for the first quarter. Without access to the H20 chip, Nvidia faces serious challenges competing in China's data center market. However, there are still strong reasons to remain confident in Nvidia's long-term growth. Nvidia remains the clear leader in graphics processing units, or GPUs, for artificial intelligence. It's important for investors to keep the bigger picture in mind. Give us a like if you like our video, subscribe, and ring the bell to never miss out. Check our Patreon for an inside look on what are the best buy and sell stocks every week.